Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. It seems the major Asian theme governing the market is whether the PBOC is able to control the sliding yuan that is currently governing the movement in the Asian forex markets as well as the rupee, which for a change saw some strength yesterday, closing below the key level of rupees 83. The BRIC summit is ongoing and it's a full-fledged show in itself. Currently, evaluation is being done on extending membership to various applicant countries. How all of this pans out, time will definitely tell us. Hi JK, yesterday you mentioned of a possible dip in USD INR. What are your thoughts on the pair now? I'm sure our listeners are very keen to hear your take on the rupee.
Yes, good morning, Swaraj. Yes, I think rupee did see some strength yesterday. Uh, Based on some flows, not confirmed which source it was, but some foreign banks were selling good amounts, and we did see a dip to 82.93. Uh, 82.90 is very good technical support, while below 82.80 would mean that we are reverting back to the ranges rather than breaking out. But the stability in yuan, relative stability in yuan, and also fall in the US yields during the European time also helped sentiment. Apart from the fact that the central bank in India has been ensuring that rupee does not cross the previous all-time high, and there has been consistent offers above 80 to 83.10, due to which probably there has been enhanced hedging by the exporters as well. But it's not that we have been on the safer ground yet, because we still trade around 83, and any worsening of the global situation or a fresh rally in the global yields can put the all-time high at the risk of breaking out. But as of now, I think we hold the range between 80 to 90 and 83.20 as we head into the weekend event of the Jackson Hole Summit, where Jay Powell is going to speak. But on the global front itself, it was a day of profit taking for the bond sellers, as they also wanted to square up some position ahead of the speech by Powell, and we saw 30-year as well as the 10-year yields dropping between 3 and 7 basis points, while the 2-year actually slightly went up. But most of it is all position adjustments, and none of the factors which have led to the rally in the yields, like relative strength of US economy, higher for longer theme on the interest rates, and also the supply concerns on the bonds. They have not gone away, and we should see them rule higher for some more time, unless we get a sense that US economy is slipping. But as of now, there are no signs. We will have some more evidence of how the economy is doing as we get the flash PMIs today from Europe, UK, and US. Also, we will have next week the PCE core inflation and the GDP data, second estimate for the US economy. So we still a lot to wait for. And besides, next week we will see the market coming into full strength after the vacation. So normally such resumption lead to a good trendy moves in the markets, both in all the assets in the markets, in fact. So that's the reason why markets are tended to square up the positions and keep a low profile for the time being. Yesterday economic data was quite sparse, and a regional survey in the US showed that the manufacturing was stabilizing, but existing home sales continued to slide because there is a supply constraint on existing home sales. The existing owners do not want to sell their houses because any fresh purchase will involve higher mortgage rates. So that's why the prices are also going up. On the UK side, there was some good news showing better fiscal picture of the government, as UK public borrowing was undershooting the expectations. This means there would be some incentive or some headroom for the government to cut taxes in their upcoming budget, and that may actually help the inflation, particularly if they can reduce the sales tax part of it. Overall, on the currencies, they did try to break higher against the USD, but a strong resistance in Euro and GBP above 1.0930 and 1.28 ensured that the ranges were intact. But we did see some more stability in the Chinese yuan, has it faced strong resistance at 7.31. Efforts of PBOC has continued to have some effect, at least on the cautious side, until the weekend probably, or more data comes from Chinese economy. The commodity currencies have somewhat stabilized as well. It's interestingly, the base metals may be giving some clues on possible stimulus coming from China, because copper has risen more than 2.5% in the last 5 days, as well as we have seen some good rise in the iron ore prices. So this may be something that the market would be watching out for. On the equity side, it was more of a sideways market, except the Nasdaq, which was in the positive territory. Most of the other markets were marginally negative. A lot of hopes on the tech sector showing good results, and this holding up the tech stocks high, but there is room for disappointment, or at least buy rumor sell fact that can result in the stocks falling off. But overall, there is nothing substantive that is happening in the market because of the upcoming events and more data expected in the coming week. So we have a quiet period ahead. Even the BRICS summit is on, but nothing substantive has come out of it. Just on the India, coming back to India, of course, there are some initial estimates that show that Q1 24 financial year might see a growth at more than 8.3%. Which is higher than what the RBI has estimated. So that is some good news for the economy watchers. On the other side, while we have been talking about higher trade deficit and its impact on the rupee, there is a report that shows that the outward flows on account of the liberalized remittances scheme has gone up by 50% in the first quarter of FY24. So it's about 9.1 billion compared to 6.05 billion in the same period last year. The major drivers, including the debt and equity investments abroad and travel, have been behind this. So the influence on the rupee, particularly in the weakening phase from these remittances, cannot be ignored. So there's a lot going on, which eventually goes with the trend. When there is a weakness, these will have an impact of accentuating. However, overall growth picture and the potential investments into India, which is expected, should keep the rupee more stable in the coming days. Thank you.
Thank you, JK. And just to quickly summarize, yesterday we saw some rupee strength, dip to rupees 82.93, and on a technical level, 82.90 is a good support. While if the pair goes below 82.80, it can be reverting back to its old range. It's primarily because of stability in the yuan and some fall in US yields that led to some relief for the rupee, and as well as the central bank efforts to curb depreciation and consistently offer whenever rupee trades above 83.10. But the worsening of global situation or the rise in yields or the fall in yuan can trigger some more weakness in rupee in case that materializes. So ahead of Jackson Hole this weekend, profit taking for the bond sellers is being observed, because of which we saw some fall in US yields. Today we are expecting some flash PMIs from Europe, UK, and US. And on the commodity side, we are seeing some rise in copper and iron ore prices, maybe as a response to the Chinese stimulus measures. That's it from us today. Thanks for listening, and tune in tomorrow for another round of fresh updates. Thank you.